Hello everyone, welcome back to Bitcoin Basics. In today's video, we look at how MicroStrategy, a publicly traded technology company, found itself in a financial dilemma and, while looking for a way out, stumbled upon a unique investment strategy that has led it to accumulate over 200,000 Bitcoin, worth over $12 billion in 4 years, with an initial budget of only $500 million. In a recent interview, Michael Saylor, the executive chairman and co-founder of MicroStrategy, provided a rare opportunity for us to look at and analyze the backroom decision-making process and the steps that culminated in the company becoming a Bitcoin whale. He also discussed not only the initial, but also the secondary motivations for choosing to HODL Bitcoin. Is there anything that has always intrigued you about the emergence of MicroStrategy, a mainstream corporate entity turned Bitcoin whale? Let me know in the comments. Meanwhile, stay tuned until the end of the video where we'll explore the unique investment opportunities and advantages, including over the recently approved Bitcoin ETFs, that MicroStrategy's stash of Bitcoin provides its shareholders and other investors. Before we jump in, if you're new around here or just beginning your Bitcoin journey, be sure to hit the like button and subscribe to never miss out on the latest videos from Bitcoin Basics. And finally, subscribe to the Bitcoin Basics email newsletter using the link in the description to receive a free copy of my Fun Money to Millionaire Bitcoin Net Worth Tracker. Now let's get started and find out how MicroStrategy ended up sitting on a stash of over 200,000 Bitcoin worth over $12 billion from an initial cash capital of $500 million. In the last 4 years, MicroStrategy has gained a considerable fan base, especially among Bitcoin enthusiasts, because of its buying spree of Bitcoin. It's arguably the first and most successful mainstream public traded company to buy and HODL Bitcoin on a large scale as assets on its balance sheet. What many might not know, though, is that MicroStrategy was founded in 1991, in the early days of the internet. Its primary focus has been building software for enterprise use. Today, its major products are business intelligence, mobile applications, and cloud services. The company became public traded in 1998. In a recent podcast, Michael Saylor described in detail the motivations, the decision-making, and the process that MicroStrategy has followed to turn into a Bitcoin company. What started the whole process and changed the company's direction was the need to put to good use a significant amount of cash it had generated from its operations. Michael Saylor has explained it as follows, quote, "What started in 2020 was our company had a bunch of cash, about $500 million, and we were generating 0% interest. Our problem was that we either needed to generate a return on the money or return it to the shareholders. We felt like if we basically bought the stock back and returned all the cash to the shareholders, we would be very vulnerable to having all of our employees picked off by our big tech competitors, and it would be difficult for us to continue as an ongoing concern." With these concerns and dilemmas, the company started looking around for an asset it could buy that would appreciate faster than the cost of capital. That asset needed to go up at the rate of the S&P index or faster. That is how it found itself considering Bitcoin. According to Michael Saylor, among the things that attracted them to Bitcoin was that it was a deflationary asset, so it was most likely to increase in value with time. Quote, "We thought that Bitcoin was digital gold on a dominant digital monetary network, and so the idea of investing in the Facebook of money 10 years before everybody else in the world agreed with us struck me as being a good investment." So basically, the first motivation was to find a place to put the money and get some returns instead of potentially losing value to inflation. Michael Saylor has described their first purchase of Bitcoin as defensive and out of desperation, but the subsequent ones as opportunistic. But why could MicroStrategy not buy securities in the financial markets? Michael Saylor explains that as a publicly traded company, it is limited in how much securities it can add to its balance sheet. Meanwhile, Bitcoin is a commodity, not a security. That means it was not limited to no more than 40% of its liquidity on the balance sheet. However, the board of directors did not expect every shareholder to support the decision to buy Bitcoin and add it to the company's treasury. A decision was reached to facilitate those who did not approve to exit at a premium share price. Michael Saylor explains it as follows, quote, "So we did a lot of work and concluded that Bitcoin was sort of like the premier digital property of the 21st century, and we bought $250 million of it. Now, we didn't buy $500 million. You might say, why? Well, a lot of our shareholders might have been shocked when we invested so much in a crypto asset, so when we bought the $250 million, we paired it with a stock buyback and announced that we were going to do a Dutch auction where we give the marketplace 20 days to consider whether to tender their shares. We offered to buy back $250 million worth of stock at a premium. During the Dutch auction, investors who did not like Bitcoin sold their shares, but many Bitcoin enthusiasts picked them up. Ultimately, the company had to spend only $75 million on the stock buyback. The remaining $175 million was used to buy even more Bitcoin in September 2020. That should have been the end of the story. The company had spent its $500 million, and it no longer had to worry about an asset that was not earning any meaningful interest or having to return the cash to investors, jeopardizing itself as a going concern, including risking losing its employees. But that was not the end of the story. It somehow occurred to the management that, given Bitcoin's high potential to grow in value, the company could get cheap credit from elsewhere and use it to buy even more. Michael Saylor explained how that came to be as follows, quote, "At the end of the fourth quarter of 2020, someone said, you could probably go and issue a convertible bond if you wanted, and at that point, our stock was trading in the high 200s or the 300s. It was trading about 2.5 to 3 times as much as it had been trading before. So this is very successful for our shareholders, and we thought, okay, let's see if we can raise more money." Indeed, MicroStrategy reached out to the market and offered a convertible bond. That bond was oversubscribed and upsized to $650 million. This credit was not only unsecured with no recourse, but also at a coupon rate of about 75 basis points, less than 1% interest rate. That is contrasted to Bitcoin's compounded annual growth of about 45%. The entire amount from the bond issue was used to buy another stash of Bitcoin. With the success of this convertible bond issue and the rallying of Bitcoin, the stock of MicroStrategy grew from under $200 to $1,000 a share within the year. Expectedly, this incentivized the company to repeat the process. This time around, the company was seeking $600 million. The second convertible bond issue ended up getting upsized to over $1 billion. Michael Saylor attributes this interest in the market to the success of the initial bond, which had doubled the money for those who had bought it. Meanwhile, the second issue was unsecured like the first one, with a zero coupon rate. The amount realized was also used to buy Bitcoin. It was not long before MicroStrategy embraced raising cheap credit and buying Bitcoin as an investment strategy. He states, quote, "By the second bond, we said this is a strategy. We said we have a Bitcoin strategy and we'll keep buying and holding Bitcoin." However, issuing convertible bonds is not the only method MicroStrategy has employed to raise the funds it has used to buy Bitcoin. Michael Saylor pointed out that at least twice, the company sold $1 billion worth of stock at once. He has stated that when MicroStrategy sells stock, it sells it at a premium to the underlying Bitcoin. They can do this because they are an operating company and can utilize a shelf registration. He explains, quote, "It's kind of like you're selling the Bitcoin at $880,000 a coin and buying it back at $50,000 a coin, thousands of times arbitrage." The company has also taken cash flows from the software company and used it to buy Bitcoin. The strategy that MicroStrategy had stumbled upon has not been without potential competition, especially when investors compare its stock with other Bitcoin-related investment options. When the U.S. Securities and Exchange Commission, the SEC, approved ETFs early in 2024, it took the shine away from MicroStrategy's stocks. Michael himself has stated that many people thought the approval of ETFs may not be good for MicroStrategy, especially because it was trading at a premium. However, he believes the opposite is true. He believes that MicroStrategy can do things that ETFs cannot by being an operating company with a huge stash of Bitcoin. That includes the ability to sell stock at a premium to the underlying Bitcoin using shelf registration. The list also includes that you can borrow against MicroStrategy stock, leverage it, option it, and buy or trade its debt. He also points out that the MicroStrategy stock has high volatility. While the S&P index has a volatility of about 12, gold 10, real estate 18, Apple 20 to 22, Tesla 45, and Bitcoin 75, he claims the MicroStrategy stock has more than 100. He bases his argument that high volatility makes the MicroStrategy stock more valuable on the Black-Scholes model. He also explains that MicroStrategy, an operating company that can issue convertible debt, appeals to various investment classes. He believes the first class of investors attracted to MicroStrategy, particularly its stock, is that of other public companies. These companies want Bitcoin exposure but can't buy it or Bitcoin ETFs for one reason or another. However, they can buy MicroStrategy stocks and remain within the traditional investment guidelines while getting exposure to Bitcoin. The second class is the Bitcoin maximalists, who want to leverage Bitcoin using their 401k. While they can't buy Bitcoin using their 401k, they can buy a stock that is highly exposed to Bitcoin, like MicroStrategy. Meanwhile, they can indirectly use Bitcoin as collateral when borrowing from mainstream banks through that stock. A third class of investors are those who are looking for volatility. MicroStrategy is at the top of a growing list of publicly traded companies that are accumulating Bitcoin. This includes Tesla, Coinbase, Hut 8 Corp, and Block Inc. According to BitcoinTreasuries.net, a website that tracks Bitcoin held by corporate entities, slightly over 300,000 Bitcoins were held by corporate entities by May of 2024. So, do you think more public companies will accumulate even more Bitcoin? And will their stocks be a better long-term investment option for investors, especially compared to ETFs? If you enjoyed this video, click the link on screen to watch the Michael Saylor Master Plan from Bitcoin Basics.